SRM Institute of Science and Technology, Engineering, Medical and Health Sciences, Management, Dental, Science and Humanities, Law, Agriculture Sciences, Hotel Management. Admissions open.
When you live in a fast-moving, ever-changing world, life brings forth unlimited possibilities. Yours to explore, excite, enjoy, educate, evaluate, and elucidate with Elan. Never stop moving forward with Darwin Platform Group. Darwin Platform Group, the visionaries.
ThyroCare, the trust, the truth.
Moving on to our keynote address on stock markets, the dichotomy. At a time when most economic indicators are falling, the one positive factor is the sustained rise of the stock markets, not just in India but globally too. So what is driving the bulls when all the other indicators are bearish? We have with us Mr. Nirmal Jain, founder and chairman IIFL Group, explaining the dichotomy. Economy is down but the stock markets are up. Listen in.
Hello friends, welcome to Business Today's Mind Rush Conclave. And the theme of the conference or this session is very interesting. The dichotomy, economy is down and stock market is up. And this is not the first time this has happened. The stock market always behaves seemingly independently in the short term. And in the long term, it follows the economic growth and corporate earnings. So at this point in time, we are passing through something which is unprecedented. When the pandemic happened about 9-10 months ago, everybody thought that stock markets will crash. And in fact, if you track stock indices, which is Nifty, then last year I think Nifty might have given a return of something like 15%. But if you have to invest on 1st of April, you would have got a return of almost 62%. That shows that how markets reacted in the first few days after the lockdown and how well they recovered. And going in this year, they're still doing better and better. So we'll come to a few drivers and what I think, but in this market, nobody has a crystal ball and nobody knows how market is going to behave next day or even in next hour. In terms of fundamental factors, India has done significantly better than most other countries, not in the economy. I'm talking about even in containing the pandemic. The number of new infections that we are seeing, they continue to edge down. And there are many countries that are actually experiencing a resurge and a second wave. So government has also announced a number of reforms and stimulus, but they are fairly modest as compared to many other countries. They're just about 2% of GDP. So the positive news flow on vaccination along with Biden's victory in the US election has also driven risk on sentiment globally. So when there's a liquidity is benign there, they look at making risky bets, and India is one of the favorites there. This has benefited India because India has received a disproportionately large amount of foreign portfolio flow in the calendar year 2020, and it looks like that flow is continuing this year as well. Most other emerging markets except China have reported actually outflows. So if there is a given amount of money to be invested in emerging markets, people want to have alternative to China as well. India stands out as a key beneficiary and a large economy that can absorb investment. So while the lockdown actually hit the economy hard, and we saw that GDP contracted by 24% in the first quarter of this financial year, the growth momentum recovered very sharply in the second quarter itself. And the GDP contraction was only 7.5% in the second quarter. And actually most of the economists and analysts track high frequency data points, and they could see that there's a YY growth in many sectors. Also, the employees with higher skills and higher income jobs had the flexibility of working from home. And even workers with lower skill or low income who lost their jobs due to social distancing, they also started seeing that there was many of the jobs were coming back. And what we have seen that at least, when we talk about HNIs or households with in the upper income group, they basically had higher savings and their income flow was continuing. Corporate earnings also rebounded very strongly in second quarter itself, and we are seeing that that momentum is continuing in the third quarter of this financial year. So when I say second quarter financial year, is September ended quarter. And this was actually helped by aggressive cost cutting and also lower interest costs. So the government made liquidity very easy, and that has driven the interest cost down. When we track EBITDA of, say, BSE 500 companies, it jumped by 7% YOY in the second quarter versus 27% drop in the previous quarter, which is the first quarter of this financial year. And similarly, if you look at aggregate profit after tax, that also grew by 13% year on year in the second quarter as compared to 30% decline in the first quarter. These are the parameters which are very important for stock market. I'm just trying to explain how a stock market is doing so well, whereas the news on the macroeconomic front is not as positive. Now, better than expected results are driving broad-based earnings upgrades. And when we see the consensus estimates, they imply that aggregate profit after tax for BSE 500 companies expected to grow by 9% and quarter on quarter and 33% YOY. Sorry, 9% YOY in FY21 and 33% in FY22. And market will always look at 1 year or 2 year forward earnings. And now GDP is expected to contract by a total of 8% in this year, but will grow on a lower base by 10% YOY next year. So when you look at earnings growth, which are key driver for stock market, probably you'll see a very, very strong growth next year. Also, we see that the financial sector has reported increase in NPAs, non-performing assets, which is not a good news. But most people expected much worse. And when we saw a commentary of large lenders, banks and NBFCs, it turned out as a positive surprise that things are not as bad. So in stock market, what happens when you expect much worse and things are a little better than that, market always reacts positively because the much worse news was discounted. And now from there on, you have a positive delta, which is going up. What we have seen is that the equity issuances have seen a significant surge because, as I explained, that the flow of capital from the foreign investors has been very strong and continues this year as well. Some of the divergence in corporate earnings and the broader economic growth or broader economic parameters that we track is also explained by the market share gain by the larger players. And they basically dominate the indices in the stock market. So when you look at the stock market indices, they will have a huge weightage of companies like, say, Reliance, Infosys, Tata, Tisco, and the large ones. And they might be gaining market share at the cost of smaller players. So this is again one feature which plays out in the stock market performance. Now, another important thing is that India's external account is in a very comfortable situation now. Our current account surplus is 3.1%. So in terms of foreign currency, we are very stable and this is because there's a strong capital flow is also helping foreign exchange reserves to be at record high. And therefore, dollar is depreciating globally, while RBI has kept rupee in a tight band, but at least rupee has not depreciated. And that basically is very encouraging for foreign investors to put in more capital in equity markets. Because for them, if the currency depreciates, then they'll take fewer dollars by selling the same stock. And if on the other hand, the currency appreciates, that's very good for their investment. So when we look at stock market, I think there are a few things which are very important. The stock market looks forward. Whatever has happened till today is of very little relevance because that is all reflected in the price or that is all known. So say when you're buying a stock today, it might have had negative growth this year of 20%. But if you know with reasonable certainty that next year it will have a 30% positive growth, you'll be very excited by that opportunity. So one, market is looking forward, and therefore market is looking at the possibility of economy rebounding very strongly. And there are enough signs and indicators that can happen, and that probably will happen in India very well. Two, market hates uncertainty and not bad news as much. Because what happens when there has been, people don't know, and that is what happened in the first 10 days or 15 days or first 1 month of pandemic, when people did not know how bad the disease can be, whether this will be contained, then there was a panic. But when people realize that the mortality is not as high, and of course, maybe in finite time we'll find a solution, then market recovers. Third, very important thing, we should know that the stock market multiples are always function of interest rate. So theoretically, it starts with reciprocal of interest rate. So supposing interest rate is 10%, then you require 100 rupees to make 10 rupees. But if interest rate goes down to 5%, then you require 200 rupees to make 10 rupees, right? You require double the money. So you'll be willing to pay twice in terms of debt investment to get the same income. At least in concept, the equity valuations also go up by equal proportion. Of course, they have to be adjusted for growth and risk. But broadly speaking, if the lower the interest rate, higher will be the PE multiples and the stock market valuations, as well as flow of money to equity markets, because your opportunity cost of fund has gone down. So all these factors have driven the markets, which we can understand. Going forward, also India's economy looks good, and India is a market which will do well over medium to long term. And I'm always an optimist, so I always think that stock markets, of course, nobody can predict market in the short term, but if you're a long-term investor and the Indian economy does well, then you'll do well in Indian stock markets as well. I mean, provided, of course, you invest in the right type of stocks and hold it for long enough time period.
Thyrocare, the trust, the truth.